Worldwide markets this week, JSE in the crosshairs. They also want to get rid of HEPS and less sense. Don't fight the trend, Rand and gold. Results galore, we'll touch on some of the better ones. I'm Simon Brown. This is Worldwide Markets, episode 656 for 12 November, and I am recording late Tuesday afternoon. Worldwide Markets, powered by Standard Bank Global Markets, Retail, and Shyft, the global money app that puts travel, shopping, payments, and investments in the palm of your hand. Enjoy the cheapest forex rates anytime, anywhere. Shyft, powered by Standard Bank. Thanks to Standard Bank and thanks to Shyft for sponsoring. Let's first get to the JSE in the crosshairs. There's two stories that are happening here at this point. The first is they've been taken to not Constitutional Court, the Competition Commission. That's right. So the argument is, and it comes from A2X, that they are, particularly around BDA and settlement and the like, that they are being anti-competitive and that they want it reversed. They also talk of 10% of revenue, etc., etc. So a lot happening there. We'll see how it plays out. This has been going on and probably will for some time. The other piece of sort of crosshairs for them is that Matengu is a small mining company. They bought or paid for an article in Business Day last week. They have for a while been alleging abuse of their share price, share price manipulation. That's the words we're looking for. And they claim that this has been happening. They've taken a step further and said that they have email evidence that JSE directors are involved. The JSE has fired back. They've issued court papers and said, prove it, like show us the emails. I mean, look, I have no idea. I mean, are there emails? It's really simple. Produce the emails. That's what you need. I mean, you paid for an article in the Business Day, produce the emails. They've got reasons why they can't. I think that if you've got that level of confirmation, as I say, emails from directors, well, then you just produce the emails. The problem that Matengu has is that they've got an ex-director with shares who is no longer part of the company, and he wants out of the shares. So there is selling pressure. There absolutely is. Is it manipulation? I mean, I don't know. When I look at it, I think to myself, this just looks like a share that is under pressure, and that pressure is coming from, as I said, there's an overhang. There's a director who wants out. And on the daily chart, you can usually see it a little more clearly. You can see fairly clear points at which the selling is happening. It was, 62 cents for the last couple of days. It's picked up. But yeah, someone wants out. That's going to hurt your share price. That's just how it rolls. Two other bits from the JSE, not in the crosshairs anymore. They are, and this is a consultation process. So this isn't happening. It's not confirmed. They are speaking to people. We will see how it goes. The one is, should there be less sense announcements? Sense, Stock Exchange News Service. Should there be less announcements? Too much on the feed. I don't think there's too much on the feed. Not at all. I mean, I don't read all of them, but certainly I read many of them. And I mean, some of them are 3 days before you pay a floating interest rate, you have to, 72 hours, you have to publish the rate. Okay, I mean, could we do away with that? Maybe. Some of it is around ETFs, and when they add and remove ETFs, the quantum, I don't have a problem with it. The other is HEPS, headline earnings per share, which is in much of the world called adjusted earnings. It is a IFRS number, and they're wondering, they're saying there's a cost to produce that number. Should we do away with it? No. Don't do away with it. Yeah, send some, I think leave it as it is, but if you want to make some tweaks, fine. Do not take away HEPS. I think it's a very important number. It is adjusted. Your earnings per share is pure earnings per share. And then HEPS is, well, look, there were some one-off costs that we want to take out. Hence, it's adjusted earnings, and hence in South Africa, we call it headline earnings per share. I like it. I find it incredibly useful. I find it a great snapshot. The company then has to go in detail as to how they got to that HEPS, what went in, what went out, all well and good. Is it really that much time and effort? I can't see it. I can't see it. But, who knows? Anyway, we will see. As I said, this is a consultation process. This is not guaranteed to happen. The JSE is talking. We will see where it ends up. I hope that we have no change to HEPS. Tomorrow, tomorrow, 12 November, depending when you're listening, 91 are listing 2 income actively managed ETFs, and they will trade in the market from the 12th. One is local, one is offshore. We have an event on Monday, 10 o'clock, 45 minutes, where I will be with the 91 team, and we will delve into the details around them. I think it's a nice addition to the actively managed ETFs on our market. They are on our database. You can find them there. And if you want to attend that webcast, Monday, 17th at 10 a.m., just go to justonelap.com/events, more information and booking. A phrase I haven't heard in a very long time, which is don't fight the trend. The trend is your friend until it bends in the end, all of those sort of things. But it got me thinking again around it when 2 reasons. One is the gold price, which is on a tear again. 4,145 as we're recording. It got to almost 4,400 a couple of weeks ago and then got below 3,900 week before last week of October. And that created a lot of worry, concern, panic at the time. I did a podcast and I said, you know what? We'd had, was it 9 green weeks in a row. We were unlikely to have 10, so then we got ourselves 2 red weeks. It's the trend. The trend in gold is up, and there's a strong story behind it. Everything else, the point is that we look at trends and we try and find the tops and we panic, etc. At some point, the trend in gold will turn. I have no idea. It might be this year. It might have turned. It might be in a year or 5 or 10 or 30. It might be at $4,100, $5,000, $10,000, $20,000. I simply don't know. What I do know is that when you got a trend and you're on that trend, enjoy it. And the other one is the Rand, which is back at 17.14. And the trend in the Rand, pretty much since the liberation blowout in April to 1990, has been strengthening. And it's going to continue. And a lot of folks, oftentimes when our Rand is strengthening, it really is actually more a dollar story, i.e. dollar is weakening. That's not the case here. We've actually seen some dollar strength. The DXY has actually been printing higher while we've been moving stronger. This trend is strong. I've said before, 17 will go soon enough. And then I think we're heading down into the low 15s is probably the next target. The 17 number is going to be a big fight. It goes back to a resistance going back to July of 2022. It's going to be a fight, but it will go. And again, there's a story behind it. I mean, part of it is desire for emerging markets. Not a lot of it, but some of it. And if you want emerging markets and you want emerging market currencies, ours is the most liquid. I mentioned last week, Kevin Lings from Stanlib was speaking about how we saw, was it August and September, the largest amount of foreign buying of our bonds since 1994. That is a big deal. And before you can buy our bonds, you've got to buy our Rand. Gold price, PGMs, the precious metals running, that is also helping. There's a lot around our currency that is absolutely benefiting. And don't stress the noise, and some of the noise was this week, was it in the Sunday, Donald Trump, no one from America is coming to the G20. It is now a G19 instead of a G20. And there was a lot of, this is going to blow out the Rand, this is going to blow out our market. And the answer to both of those was, well, no, it didn't. In fact, we are almost back at all-time highs. And last week, we were all worried about, the end of everything and how it was going to get ugly and how, we were, the bear was in town. And in fact, I spoke about, less worry. But, well, so far, so good. And we're now on for November is another green month. So we're on track so far. And to be clear, it's only 11th as I record this. We're on track for 11 months in a row. Can we get, mind-boggling. Can we really get 12 months of a positive return on our market? Sure, likelihood I would say is, tiny, but not impossible. That maybe is the key point. Not impossible. Let's touch on some Results, Stor-Age, a stock that I do own. So what does Stor-Age own? They own those big red buildings you see around the country called Stor-Age, and they are basically selling you space to store stuff. It says it in the name. The beauty of Stor-Age is that it is kind of always in demand, right? When things are going well, we're buying stuff and we got too much. When things are going poorly, we're downgrading and we've got too much stuff and we want to store it. When we're getting married, we're storing stuff because now we've got two homes in one. We're getting divorced, we're storing stuff. We're just always storing stuff. I have a storeroom where I live now, and it's the greatest thing ever. It's part of the building. I pay it as part of my rent. But the Stor-Age results were good. South Africa, very good. The UK was okay. The problem, perhaps more than anything, is that NAV is 1777 and it's trading at NAV, which shows you just that, I suppose in a sense, how good a stock it is looking. Dividend yield, it's a little higher now. It's up around 7%. I don't think it's expensive. I just think it's fairly valued. And to be clear, there was another. I mean, we did over 30% in the REIT space last year, and this year in October we did over 10%. It's been an absolutely phenomenal run. And I spoke to Ian Anderson from Mercantech Investments. You can find it on my MoneyWeb podcast. Chatted to him about that, and he was saying, yeah, look, going forward, returns are more going to be in the REIT space around yield. Except he told me that in January too, and we've had a phenomenal year again. I mean, here is the Satrix Pro ETF. Back in November 23, it bottomed at 680 odd. It's pretty much doubled since then. And that excludes yield. You've been getting fairly chunky yield at the same time as well. Dividend yield of around 6%. So, I mean, going really, really strong. Another set of results is Premier Group. Now, they make bread, which is in of itself quite boring. Revenue was up some 6%, but HEPS was up some 27%. And that is massive efficiencies that they are managing to squeeze out of their business. And they really are doing incredibly well. They've got a new mega bakery in Southern Gauteng opening. Phase 1 opens this week, perhaps, maybe Monday, Tuesday next week. Phase 2 in February, that will get more efficiencies for them. They've seen input costs such as rice, such as maize coming down. Did you know they provide the chocolates and sweets and stuff for Woolies? I did not know that. Now we do. So just a really, really good business. The trick with it is that it's not expensive. It's just not crazy cheap. It was the results were a beat. It makes the current PE, it was a 6-month number. The current PE forward is now probably closer to 14. Dividend yield a little over 2%. It's not a cheap stock, but it just shows that something as boring as bread can actually be really profitable and something really, really worth having a look at. Kudos to them, I suppose. We're not going to argue about that. So here's something that I actually interviewed someone about this a couple of weeks ago. And General Electric, we all kind of know General Electric, and we all kind of know it as a deeply boring company, except it's not anymore. It's still called the General Electric Company. The stock code is GE, but it's now General Electric doing business as GE Aerospace. Designs and produces commercial and defense aircraft engines, integrated engine components, power, manufacturing aircraft systems, etc. The point with aeroplanes is that they need a ton of service. They get a ton of service because you don't scrimp on that. And demand for passenger travel is up. Demand for cargo travel is likely up too. And therefore, more aeroplanes are needed. And this is it's in a sense a sleeper. I mean, the PE has absolutely ran. The expectations are 35% increase for financial year earnings. PE, it's north of 40. Dividend yield is almost nothing at all. But it's just a stock that at this point in time, I'm thinking it might be expensive, although maybe expensive is relative. That's what I was looking for there. And it is actually, here's an interesting fact. So, I mean, the range of prices, the low expectation is 279, the high is 374, average is 343, and it's currently at 312. So maybe it isn't even so expensive. I need to do a lot more digging into this. I got it from Gerrit Smit, Stor-Age Fleming. I was interviewing them a while ago. And it's just, as I said, it is, tourism is expected to grow some 4% a year. go over the next 20 odd years. 3/4 of commercial flights are on General Electric turbines. 3/4, 75%. And as I said, they need to be serviced. And this service income is 70% of the company's business. It is cash, it is profitable, margins are compelling, 26% margins, 40% return on invested capital. And as I'm thinking all of this, it might not be as expensive as I thought, but it's just, what do we look for? There's competition. Rolls-Royce. Many of you are saying Rolls-Royce, but Rolls-Royce is typically wide-body planes, and therefore the GE Aerospace rather is commercial flight market, not so much the wide bodies. And it is just one of those businesses. Are we going to be flying more in the future? Yeah, I mean, no one is disputing that for a second. We absolutely are. And that has, positions the company really, really well in that regard. And it is, little stocks. I didn't even know that GE had become GE Aerospace. If I hadn't had the interview, I would have completely missed it. And that's the beauty. I get to interview people, 15 interviews a week, 14 interviews a week, and learn stuff. And that's always the point. And there was a really, really good learning. And I've just remembered somebody asked me to have a look at CAP. They are Somerset West based, but they've got a lot of plants in northern KZN and the like. They PG Bison. They do auto aftermarket. They also they've got a bed business as well. The PE absolutely blew out to 400 odd, but that's because of earnings collapse. And that was they've been doing a large amount of capex, a couple of billion on a new PG Bison plant. The forward PE is expected to return back to single digits. There was no dividend, again, because of the last set of numbers, but typically it pays a fairly good dividend. And the question put to me was, what do I think about it as a stock? Look, it has been under pressure. It's not just SAN, right? So they do beds, they do vehicle automotive aftermarket rather. Automotive aftermarket parts. Say that once slowly. I'm struggling. And they do their bed business. They've got Unitrans, which typically works in mines. They've got the PG Bison, which a fair bit of it is doing exports. They had a problem with a fire a year or so ago on a place next door, and that damaged their plant, and they had to put an insurance claim in. It's a nice little business. I chat with the CEO, well, now the outgoing CEO, I suppose, fairly regularly on my MoneyWeb show. The trick with it, perhaps more than anything, is it's just small caps in this market are not loved, not even slightly loved. They are very much unloved. Now, do we get to a point where they fall back in favor? Sure. I mean, I really do think that they do, but I think it's going to be some time before we start to see that happening. And again, it's going to be less about the sort of investors coming in. The institutions. It's more going to be about folks like you and I. This is a 4 billion rand stock. It is quite very, very small. It's one I keep an eye on, but I want to see something happening before I get too excited. And the other question I've had from folks has been, what's my preferred gold miner? You know what? You can buy any gold miner that you like. It's going to make you money if gold price goes up. I like AngloGold Ashanti, and I like Pan-African. And AngloGold Ashanti, there we go. AngloGold Ashanti had a stellar time. I mean, it hardly even pulled back in the recent little crisis. If we zoom that chart out, it's been, it is at highs. There was a significant break at around that 540, but it's more than doubled that. And then, as I said, Pan-African. But if some folks are saying to me, what about Sibanye? Because we get gold in PGMs. Sure. What about Sibanye? Absolutely. Pan has just been a phenomenal stock, up 7-fold since October of 2 years ago. 7-fold in 2 years is just staggering. Gold miners are ridiculously profitable. I spoke about it back in April. I pointed out that last year their average income on gold was around 2,200. This year it's probably going to be 3,200, and if gold stays where it is next year, it'll be 4,200. There are risks what they do with that money. Absolutely, don't disagree with that. But if you like gold, just pick a gold mine. I mean, even the Satrix Resi has doubled this year. It pulled back a little off the highs, but that is predominantly gold. Heck, the run, as I spoke a few weeks ago, in the top 40 vanilla is to a fair degree, thank you very much to gold miners. So if you like gold, I do, and you want a gold miner, you can buy almost all of them. Remember, Harmony has now got a lot of copper, which offsets some of the gold in that regard. DRD's had some issues. Sabanya's got the PGMs. Just buy a gold miner. How long do you hold it for? I don't know. Gold is going, and it's not going to stop anytime soon. So I hold gold in the ETFs, and I hold gold miners. Worldwide markets, powered by Standard Bank Global Markets, Retail, and Shyft, the global money app that puts travel, shopping, payments, and investments in the palm of your hand. Enjoy the cheapest forex rates anytime, anywhere. Shyft, powered by Standard Bank. Thanks to Shyft, thanks to Standard Bank. Remember, 10 o'clock Monday in the morning, we've got a webcast on the two actively managed income ETFs from 91. And then our final power hour for the year will be 8 December. Position your portfolio for 2026. That will be up on the website for booking probably early next week. But let's leave it there. My name is Simon. We'll chat again next week. Until then, as always, look after yourself. And if you can, look after somebody else as well. Cheers all.